The markets continued higher today, led by those Magnificent Seven stocks. So it took a little bit of a breather, but they've really roared higher again, led by Tesla this time. So it kind of takes turns. XLY appears to be with Amazon taking its turn after XLK has had a good run, with Nvidia obviously, and Apple even kind of surprisingly making a good run, and Microsoft. In fact, I think if I remember right, Apple and Microsoft both got overbought clusters today. So really good run, and I mean our sector rotation is pretty much going between, one XLY, XLC, or XLK, and now it's XLY's turn. So we'll break that down. Take a look at what's going on. Take a look at just how bullish we are, and why we've been so bullish in the past 3 months. We'll take a look at those big leaders, the leadership within those technology areas, and what everything else has been doing. We'll take a look at moves in bonds and the dollar today, how that's impacted stocks, and take a look at kind of what, just again, how strongly bullish we are in context of the bullish moves we had preceding this. So kind of another in the line of some previously bullish moves, and what that might mean in terms of, a new bullish trend starting for, say, the Russell 2000, and how bullish we may end up being by the end of the year, or even by the end of the summer in that, and how that might impact our expectations on everything going into the next little bit. So we'll take a look at all of that in today's, taking a look at the breadth and the sector rotation as always, and then our trade is actually in the consumer discretionary space, a stock that appears to be on its own breakout pattern, and we'll talk about how to trade that. So let's go ahead and get started. Today is Tuesday, July 2nd, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. And before we get going too far, I invite you to subscribe to our YouTube channel. This icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos, and join our Market Outlook Facebook group that we've created. All right, if you're watching this on our blog, check out some of these other things over here on the right, including our Market Outlook live video where I take a look at old Market Outlook trades, see whether we should stay in them. We actually got out of an old one today, put on today's already before the market close. Come down to the bottom, click this heart. It opens up this tab, hit that like button there. Same thing here, click this thumbs up icon. It opens up this tab, hit that like button. The more you do that, it helps get our content out to all of our followers on these platforms. So thank you to those who like this day in and day out. Those who don't, you can like it right now with 1 or 2 really easy clicks, and that'll help us get our goal up to 100 likes on our Market Outlook tweet. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see very strong bullish trend still on the intermediate line turning back up, but really it doesn't matter where it's going up, down, sideways, as long as it's in the reversal zone, you're going to be strongly bullish, and that's how we are. Of course, the near-term line coming up, again, off of a bullish low point. That's good, right? So we go from being in bearish territory yesterday to now getting up to the 59th percentile, and now tomorrow you would like to see that near-term line get above the 80th percentile, right? To go from 2 days from bearish to the upper reversal zone. Otherwise, we again run into the same risk that we just barely had, where we get a bearish near-term peak again. And again, the last time, when these kind of when we get these consecutive bearish peaks, they tend to precede times where the intermediate line drops, and we ultimately get bearish lows. So we didn't get a bearish low after this one. And if we were to get a second peak without getting into the reversal zone, or maybe just like a toe dip in there, then we'd be very susceptible to a bearish low point coming up here soon. Again, there was only one time here, and you ended up with the bearish low point that started that intermediate decline. It didn't last very long, but still ended up being about a 5% decline there. Momentum line jumped up, did not jump into the reversal zone yet. Again, it doesn't have to, but it'd be nice if it did. The near-term line is more likely to get into the reversal zone if the momentum line does. Again, it doesn't have to. It can. The near-term line can get into the reversal zone like this, for an example, like these two moves, without the momentum line. But rarely do you ever see the momentum line get up there and the near-term line doesn't. So it's a good sign when the momentum line gets up there that the near-term line is also going to follow suit. So the fact that it didn't, it got to the 81st percentile, again, toe dip, right? The fact that it didn't get strongly up here suggests that there's still a possibility that the near-term line won't get there tomorrow either. The NASDAQ 100 Again, same thing. This is very likely like now because again, one day you're up to the 76th percentile. You'd have to have a pretty significant drop. And again, your momentum line did spike up there to the 98th percentile. So very likely the near-term line will also follow suit. We'll get up past this 20,000 level on the NASDAQ 100 and continue to push up to new highs. Okay, if you take a look at the Dow Jones Industrial Average, it's a different story, right? So we were below 40 over here. What about on this day? We were below 40. It's taken 1, 2, 3, 4 days, and we're still not above 80. So again, the momentum line's not up there either, so it's unlikely. Now, the near-term line did cross above the intermediate line, so that's actually a pretty good short-term signal. We need more than that, right? We need to get above the 80th percentile, and again, it's just taken so long that it's not likely that it will. Look at the Russell 2000, and the near-term line actually dropped. It's continuing to drop. It's back in bearish territory here. Your momentum line was oversold. It's still in bearish territory. In fact, all three lines are not in the reversal zone, but all three lines are in bearish territory, with the market sentiment line still rising slightly, but the intermediate line being below the market sentiment line. And we're still actually below a falling moving average. So that's the only red moving average. The Dow Jones is still yellow because we're above a falling moving average, but it is falling. And then, of course, your SPX is green and we're rising, and the NDX is green because we're above it and it's rising. Let's take a look at the weekly chart. So you can see again that small body, the body down here, the size of the body down here is below. It's at 3 week average, which is what the purple line is showing. We are still in the 93rd percentile for the past 3 years in terms of how big that gap is between the 10 and 40 week moving averages. If you go out to 5 years, now you're including most of 2021, where we were pretty darn high. So we're only in the 86th percentile, but still 86th percentile where my cursor is. I mean, that was higher than pre-COVID. It was higher than what we saw in 2023. In fact, if you look at the size of that now, which is kind of diverging a little bit, with potentially lower highs, with obviously already higher highs. But you can see we're also higher now. It's a bigger gap now than when we had that tremendous parabolic peak in early 2018 and all the way through. So really only 2021 had a level that was higher than where we're at now and earlier this year, which again sets us up for divergence. It's like kind of how we had going into the 22 correction, where we had a divergence pattern there with higher highs here between these red arrows, and lower highs on the PPO down here. Obviously, you have two green arrows now on the S&P 500, almost three. Your S&P or Q is the same thing. You have the two greens. The Dow actually does have 3 green arrows. Interestingly enough, but we don't have the green line that goes with it. That ideally would go with it, but you do have the stochastic's got the green arrow again, and you're back up there. Of course, your IWM still has the one red arrow because you're still below the moving average. So the only index right now below the moving average. So the green shading, interestingly enough, green shading, and it's on the Dow Jones. Out of all indexes, it's the Dow Jones that's given us 3 green arrows. We are above moving averages. We never did get, even though the MACD is below its moving average. Same thing with the Qs. MACD is below its moving average, so we're easily up above it. The Dow Jones Industrial Average, the MACD is above its moving average, and we are above all these moving averages as well, kind of flirting with that very top-heavy point of control. IWM also has a very top-heavy point of control, but we're below it, and we're below moving averages. The MACD is above its moving average, but it's still at bearish levels, and your stochastics is still in the lower half of the chart trying to get out of bearish territory there. Very, very low volume, as you can see. We'll take a look at that here in a second. Looking at the DMI for the S&P, you are above 30 on the positive indicator. You're almost below 10 again on the negative indicator. So just like that, you're already almost back to severely bearish levels, or excuse me, bullish levels, like relatively parabolic. So your ADX is above 30. It's at the 31. Again, you can kind of see it got to 31 over here, and even made a run above 30 on the second wave higher over here before starting to drop down. So you've had 3 straight intermediate rallies. One, you can see them here, 1, 2, and then this third one. So we've had 3 straight intermediate rallies where the DMI got above 30. I mean, that's not very common. You can see like this intermediate rally got above 30. This one, as long as it was, I mean, it was a pretty long intermediate rally here without any significant pullback. It got above 30 briefly there, but barely, right? And then, of course, the intermediate rally you had here peaked ultimately with the ADX up above 40. So you can kind of see it. It tends to peak. A lot of times it will peak at the highest level. Not always. You can see this one peaked at the very beginning of the move, and we continued higher. We'll see. So again, another intermediate run, getting above 30, which is it's pretty strong. If it got above 40, which is unlikely because the positive indicator hasn't been above 40, but if it did get above 40, considering we just had 2 straight that were above 40, that'd be very, very uncommon to have the last 3 intermediate rallies all be parabolic moves up to the upside. Again, any move on the ADX above 40, you're talking parabolic moves there. Not very common to get that. RSI and CCI. RSI is still back up above 70. CCI back above 100. So they're both still very bullish. We'll edit this and continue to push this out into today. And this one as well. We'll edit that and also push it out into today as well. So they're still green. I haven't broken the lower half of the chart yet, much less below 40, which is what you need to really confirm the bearishness. Same thing here. We haven't even come close to breaking. You have to break below minus 100 on the weekly CCI to get it to stop being green here, which is what happened when we broke down here. And we're not anywhere close to that. Not anywhere close to that. So a very weak pullback is all just to stay pretty strongly bullish here. So that's what the RSI and the CTI look like. Of course, your Ichimoku cloud still shows a very mature trend going there. We're above the green line still. If you look at the diamonds, we're still kind of flat, trying to get above the line, trying to get above the Ichimoku cloud. We have a very we had a negative rate of change. It turned positive today, barely. Has a good chance of staying positive, but no trend at all going here. Same thing with IWM. No trend at all going on that. We are, we're right around this very skinny cloud, and we're still kind of up and down below these lines, and we're still pretty negative on the rate of. Well, it's not very negative today, but it will. If we go flat tomorrow, it will be back to being pretty negative tomorrow. So that rate of change is, that red line is still easily below the current, which is the red line is the current price. Is still easily below where we were 26 days ago. Finally, looking at the Bollinger Bands, we are back in the upper quartile of the bandwidth. So after a week or so being outside of the upper quartile, we've made a run back up. The bandwidth is falling. Momentum is falling as the bands are moving back inside or towards the Keltner channel. So we still have the green dots. We haven't changed that yet. IWM still has bearish momentum, and the bands are still inside of the Keltner channels, and the bandwidth is extremely low, like a new 150-day low. I mean, that goes back quite a ways here. Let's go to a daily. So you can see, I mean, that's lower than the last 5 years. Even before in 2021 when we went parabolic, had the fake out, and then things really hit the fan from that point. We're even lower now on the bandwidth than we were then. So it's an extremely, extremely low bandwidth right now, and we are right smack dab in the middle of a very, very extremely low bandwidth. So we are setting up for a breakout move in IWM, and again, crossing our fingers that it's a move up to the upside, not to the downside. Let's take a look at today's intraday range. As you can see, today's intraday range, we are still inside. We didn't get a new high, though we had a good move, higher high, higher low, closing above yesterday's high. So it's a good rally there. It's a relatively decent range, as you'll see in a second. Still a bullish pattern here. IWM, remember, is setting ourselves up for a bullish crossover that we haven't got yet, because the new high is going to move down to there. So the new high is going to move up above the red line. Well, actually, it already has. Excuse me. That's where it is now. So that's where the green line has moved up to. Moves up to 31, because the high tag is going to be right there, starting tomorrow. Already is technically, because this is the 20 days. That's day number 21 over here, so it technically already is there. And we are in the lower half of the chart still, but at least we don't have a new low, right? So we are just kind of coiling with a very small range as both these lines are kind of working towards being below 30. It's not common. It has happened, but it's not common to get both lines below 30. If you take a look here, let's see if I can find the last instance of when that happened, because it's very, as you can see, it's very rare. Let's see here. Here we were pretty close. Yeah, we were at 31 and 0 on that line, so we are close, not quite. Same thing over there, right there. Here we were right here. We ended up being at 26 and 0. So that was the last time. Here we were at 21 and 31, so we jumped up about 30, just barely went from 0 to 31. But that was the last time we were so sideways that both the high and the low came down, and we had to move to the downside initially before we had a really good trend up to the upside. So it's kind of like a squeeze play when you get both lines down there, that it's another sign that we are squeezing and setting up a move that we can still knee jerk in one direction before working away in another, but eventually it leads to a trending move, an intermediate trending move in one way or the other. Again, we were hoping it would be in the bullish side, but again, knowing that it's unlikely we can get a new intermediate trend to develop today, considering that S&P is already on a mature intermediate trend as it stands. It can stay on a mature intermediate trend for months or weeks, and who knows, months, but not as often, not as likely as that's a lower probability scenario. You can see today's trading range and volume below average or above average on the trading range, over 5 points, below average on the volume. So the volume continues to be really, really low, even if and the trading range. Remember, the ATR itself, 5 points is in the upper half maybe of the 52-week range, but the average itself, the ATR itself, is very low. It's extremely low at 0.8, barely above 0.8%. The volumes are also at extreme lows. We've talked about that a lot. Volatility is also dropping. It was below 12 for a good chunk of the day. Looks like it closed right around 12, a little bit above, a little bit below, right to that 85% mark again, which is kind of an extreme low right now, at least it has been this year. And then your VVIX did drop down to 75 today. Had a low point here. Let's look at the VVIX. The VVIX hit a low point today of 75.3. So again, that is an extreme low as well for the VVIX. So as we talked about, even the range, when you look at the range of the VIX, we've really been compressing. We're easily below the 10% mark. Anything below 10% on a move that's usually a move to the downside is what initially gets it below, or to the upside. That's what initially gets it below. So you can see on that initial surge, the VIX actually dropped. But we've been below 10% for a good chunk of this past 12 months, just because we're so compressed. When you look at the long-term chart of this, you can kind of see what the monthly chart is, and you can see the monthly. We're at 1.41. The range on a monthly basis is 6 2/3 points, and we've had 2.44 points last month. We're at so far 1.41 points. Let's take a look at the option expiration, since we're a lot closer to July expiration than we are the end of July, since we just barely started the month. About a 7-point move on the expiration basis, 3.36 points last expiration cycle, and we are currently at 2 points on this expiration cycle. So volatility is compressing in a big, big way, and that generally is what generally leads to the move up to the upside on volatility, right? And you can see, the average values over whatever time frame you're looking at is so low. Like, we're below 15 on the 200-day average. I've talked about the 30-day average getting down as low as it is at 12.69 right now. Again, that's that it's already pretty low when I was showing you before, but now this is where it's at. It's lower than we were over here. I mean, the average value, you have to go way back to find when the 30-day average was, even before COVID, you were low. You weren't this low on the 30-day average before the COVID, and we were set up for a big jump. You have to go back to over here in 2017 when we were the average got down to about 10, the 30-day average. Remember, interest rates were rising, but only once a quarter. You still had very, very easy conditions and a very strong balance sheet that was slowly coming down through most of 2018. Hadn't started coming down yet in 2017. Still a lot of liquidity in the market. Still a lot of liquidity in the markets right now, as you can obviously see. Very, very loose financial conditions, which is why it makes it hard for the Fed to cut rates, because of how loose financial conditions already are. All right, now let's take a look at what's driving the price action. Again, the Qs are big winners, 3-month returns of almost 10%. If you look at the main stocks within the Qs, like this makes these 12 stocks right here. These are the biggest companies in XLK, XLY, and XLC. They make up over 55% of the NASDAQ 100. So 12 companies make up over 55%. They make up about 36% of the S&P 500. So over a third of the S&P 500 comes from these 12 stocks. And you can see, like, Microsoft has got 10%. I mean, remember, the 3-month return on the Qs is 10%. Microsoft's up at 9 with a cluster. Apple's up 30 in the last 3 months with a cluster. Nvidia has been pulling back, but still is up 37% over the last 3 months. Google's up 20%. Amazon's over 10%. Broadcom's over 20%. Meta's pretty flat. Tesla has a cluster up 38% in the last 3 months. Remember how beaten up Tesla was? Not the case anymore. Over 10% gains for Netflix, 13% gains for Adobe, drop on AMD, 17, despite a pullback, enough of a pullback that we actually have a very low intermediate line, in fact, the lowest out of all these stocks, and you still have a 17% 3-month return. So you can see why the Qs are doing so well, but it is pretty much just the Qs that are doing so well, as a lot of these other stocks, the S&P is doing well, but IWM's down 3% in that same time frame. EFA is down 1%. EEM is doing okay, kind of trying to match up there. If you take a look at just at what happened here today, let's go to July the 2nd. Come out to a 5-minute chart. You can see the Qs, again, the big outlier today as well, up a full percentage point here. Really benefiting from the jump in bonds, right? So bond yields dropped today. Bonds themselves up 3/4 of TLT, outpacing SPY, which is typically not very bullish when TLT outpaces SPY. But if you look at the ratio chart here, let's go to the ratio chart and look at TLT relative to SPY. Give it a second here. You can see the Qs relative to IWM, third highest close ever. So a big jump up higher. So we're still parabolic here, though we are converging, but still parabolic on that. But if I look at TLT relative to SPY, again, it outperformed today, but generally speaking, the ratio is negatively correlated to the market. So S&P does not do well when TLT is outpacing it, generally speaking. You can see TLT has been way below its moving average. And really, the last 2 days, TLT really got hammered by what's going on. And so today was just a small little rally. And it's, again, not very common. A lot of red days and far drops since COVID. We've been declining. TLT has been on a significant drop. Very strong positive or negative correlation. If I were to go out a little bit further for some context, when TLT is outperforming, it's not a good sign, and you can see it just rarely outperforms. It's generally like COVID, it outperformed. Like, it generally outperforms during these kind of corrective moves. 2022, it didn't even really outperform during that one correction. COVID, it did. Q4 of 18, it did. 15 and 16, it did. 2011, it did. And you can see even in 2010 it did, and we were still below the 200-week moving average. Obviously the bear market and the correction that preceded it, it did. So 2022 is really the only correction that we've seen here recently where TLT actually underperformed SPY during a correction. Typically it outperforms, but because of that, it's really gone negative. Like its long-term PPO is very negative here. Everything is negative. We're parabolic up to the upside again, just like we were back in 2021, right before the correction started in 2022. So a very similar parabolic move. So we are, again, very, very oversold. I saw a tweet from Liz Ann Saunders talking today, that talks about, as bullish as equities are, bonds are just extremely oversold. If you look at it on this chart here, let's look at TLT. There's the bond yields. It's still like today it didn't drop very much, but if you look at TLT on a weekly basis, it's still very, very negative, well below this 200 week moving average here. Eventually, there we go. So well below that 200 week moving average and very bearish momentum. That is trying to get positive. The MACD and stochastics are both trying to get positive, but TLT has got a big break it would have to make if it's going to reverse course and start being and again, if we break that 50 and start working it into that gap, which we will someday, we're not gonna stay down forever. So at some point in time we will work into that gap, if not get back above the 200 week, which typically it does during bearish moves on the market, on risk appetite in general. Of course, as was mentioned, TLT made a big move. The dollar was a big move to the downside. So if you take a look at the dollar index, let's go to the market forecast chart for the dollar. You can see the big move, relatively big move lower that it made today. It's down 4 days in a row now. 4 days in a row. It's been down since peaking on June 26th. So it's brought the near-term line down, but not to bearish levels yet. The intermediate line is still strongly bullish. So I still wouldn't necessarily bank on the dollar being bearish. This little near-term decline, it's still got dark green shading and green lines, so we haven't necessarily changed the trend. And commodities took a little bit of a breather too, still up 0.13%, but you can see, it's flirting, intermediate lines crossing, it's flirting. The near-term line got in the reversal zone. It's flirting with starting a new trend, a new bullish trend to the upside, and that's typically bullish for yields. Yes, it was down a little bit here today, but typically it's bullish for yields. And you can see the breakout we had yesterday and today. We were down today, but not enough to get into that gap or get back below these moving averages. Let's take a look at how the sectors performed today. There's our comparison chart there, and let's take a look. You can see XLK is doing very well. Utilities had been doing very well. They pulled back. They have pulled back in a very, very big way. You can see here that, give it a second here. There we go. Discretionary had the biggest move, and a lot of that was Tesla. Tesla's up almost 10% today. So big move higher in discretionary stocks, helping that regain some lost ground. In fact, when you look at its relative rotation graph, it is now in the leading category. Everything else is moving up to the top. XOK is finally starting to give back some of that momentum, and everything else is moving higher. Energy is moving higher. It's got the strongest momentum. Typically, energy doesn't outperform when the markets are bullish, so that's something to keep an eye on. Financials are doing well with strong momentum, and discretionary has the other strong momentum. But everything is moving up in momentum. Safe havens, cyclical, doesn't matter. Everything but XLK. XLK is the only sector right now losing momentum, and for that matter, also losing relative strength. Everything else might have negative relative strength except for XLY because they're on this side of 100, but at least they're moving to the right, and XLK, which still has positive relative strength, but is moving to the left. It's the only one moving to the left. Breadth continues to be an issue. 146 is the drop down there on new highs and new lows. So we're still, like the number of stocks above the 50-day moving average is jumped back up to back 234 again after getting close to 200. So that's a good jump back higher Still below the average, still below 250. So not the best. McClellan oscillator is not strongly negative, but it's still, well, it finished slightly positive again. So we had our second straight out of 3 days, our second day of being slightly positive, and we're still at minus. We were down to 100 on the summation index today, but we rallied back up. Let's see what the the number of stocks here on that got new highs and new lows. So we had 72 is the number to get 2.5%. We only got 66 new lows, and we had 66 new highs. So we're just underneath that 2.5% mark, which would signal the potential Hindenburg omen, right? The signal that tells us that the breath is so bad that it could signal the beginning of the end, so to speak, of this current intermediate run that we're been on. So it's so rare for us to be still bullish, even though we've been below zero on the oscillator for so long. But that's the case. We're up, 3%, and as I shared with you before, XLK, XLY, and XLC have done really, really well since those instances. And now it's, it was XLY's turn. There we go. It was XLY's turn before, and now it's XLK's turn before. Now it's XLY's, and for that matter, like I said, everything else. All right, now let's take a look at our trade idea of the day, and it's actually on Airbnb, kind of in this consumer discretionary space, travel space. It actually had a nice little good breakout signal today, up almost 2% there. It's got a strong bullish market forecast pattern. The intermediate line is green. We're above a rising intermediate line. The moving average, the intermediate line's up above to extreme highs, so strong, very strong highs. So good, strong move. We're 4.5% above, which is not very strong. So it's been like we may just be kind of getting started here on this. If you look at the weekly chart, it's right here, 4C. Look at the weekly chart for Airbnb, and you can see it's got eventually here. There we go. It's got a pretty good weekly candle, closing above the 10-week exponential moving average last week, and now you have a higher Hakunashi close, a higher high. In fact, it's kind of the second straight week of higher highs and higher Hakunashi closes. You can see the PPO has been dropping. It's just now starting to turn up higher. The size of the candle is above the 3-week average down there at the bottom, so very good signs. 3 green arrow chart. If you take a look at the 3 green arrow chart here, obviously you have 3 green arrows and pretty decent average volume, and you can see the dark green, the green shading that we've had here for a while. If you look at the 3, when you break the lines out, you can see that you've eventually, sorry, my computer's running really slow right now. There we go. So we are above the 50-day moving average. It's having to cross the 30, the 8 and 17 have crossed the 30. They're almost about to cross the 50. The MACD and stochastics are bullish. You're breaking above you bounce off the 200-day. You're breaking above the value area, so getting to very good bullish levels there. Let's take a look at some of these other oscillators down here. If it won't go too slow for me. So you got a good strong DMI pattern here, well above 30, way below 20 on the. Sorry, that was the S&P. This is finally so slow that it drives me crazy. But you're above 25. You're well below 20 on the pause. So your ADX is starting to rise there. So that's a good sign. Let's look at the RSI and make sure that the Airbnb actually comes up. You're above 60 on the RSI, well above 100 on the CCI. In fact, the weekly CCI is making its way. Remember, after being below 100, it has to cross back above 100 to start a new bullish trend, and it looks like we're headed in that direction. Obviously above 50 on the weekly RSI as well. And then you look at the Ichimoku cloud. We're not quite, through the cloud yet, though. It's a good sign that we're at least in it. And then you have the weak bullish trend starting down there at the bottom, so that's a good sign. And then finally looking at your Bollinger Bands and your Keltner channels, and you can see the band width was relatively low. There it is, your band, excuse me, it's still SPY. Let's try this again. There we go. I was going to say the bandwidth was really low. But now it's starting to move up as we are outside the upper band and pushing up against the upper Keltner channels, and potentially we've had some positive momentum, but we haven't broken out yet to get the green dots. So we'll see if we can get that kind of a move. So to take advantage of that, we did a bull put spread, selling the mid-30s delta, the 150, buying the 145. Position sizing for our normal risk, in this case $1,000 for the higher probability trades, and getting a pretty decent return for that risk, almost 500, well, about 500, $495 for that risk. So a good trade, a good return for the risk that we're willing to take with a pretty decent probability of success. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Join us at MarketScholars.com for free. Follow and like us on Twitter and Facebook as well. Have a great rest of your Tuesday night, everybody, and we'll see you all tomorrow.